Golden rules of accounting. Three golden rules of accounting are used in traditional approach. These rules are applicable irrespective on all classes of the transaction. These rules of accounting are based on the accounts, which are divided into three categories. These are personal accounts, real accounts, and nominal accounts. Rule 1. Debit, the receiver. Credit, the giver. This rule is applied in case of personal accounts. When someone gives something to the organization, it becomes an inflow and the individual must be credited in the records. This is also valid in reverse, whereas the recipient must be debited. For example, 1. Paid $100 cash to Mr. ZXY. Mr. ZXY, debit $100 by cash, credit $100 so. This is the personal accounts, who is the receiver? 2. Received $500 through bank from Mr. ABC. Bank, debit $500 by Mr. ABC, credit $500 so. This is the personal accounts, who is the giver? Rule 2. Debit, what comes in? Credit, what goes out? This rule is applied in case of real accounts. Real accounts include machinery, land and building etc. They have a default debit balance. Therefore, when we debit what comes in, we are adding to the existing account balance. This is exactly what needs to be done. Similarly, when we credit what goes out, we are reducing the account balance when a tangible asset goes out of the organization. For example, 1. Received $500 through bank from Mr. ABC. Bank, debit $500 by Mr. ABC, credit $500 so. This is the real accounts, what comes in? 2. Paid $100 cash to Mr. ZXY. Mr. ZXY, debit $100 by cash, credit $100 so. This is the real accounts, what goes out? Rule 3. Debit, all expenses and losses. Credit, all incomes and gains. This rule is applied in case of nominal account. The capital of the company is a liability. So, it has a credit balance by default. When we credit all incomes and gains, we increase the capital, and by debiting expenses and losses, we decrease the capital. For example, 1. Office rent $1,000 paid in check. Office rent, debit $1,000 by bank, credit $1,000 so. This is the nominal accounts, all expenses. 2. House rent $600 received in cash. Cash, debit $600 by rent income, credit $600 so. This is the nominal accounts, all incomes.